Good afternoon. This is Chris Robinson, Robinson Ag Marketing, 312-638-8868. If you're looking for help, if you're looking for advice as we sludge through the marketing year, which is 2025 in the grains, please give me a call. There's some strategies still that we can use to defend as we head into the August 12th USDA report. D's corn led off the day here, down 5 cents, 402. That's where we settled. The low of the day was 401 and a half, new low, new contract low. Now we're going to see, if we take out $4, where will the sell stops take us next below? If you look at spot corn traded down to 380 and a half, finished the day down 5.5 cents at 381 and a half. The old lows on the chart suggest that there might be some interest there at 377, and if 377 fails, we're looking at 360 and a half. Those are all lows that we made back in August and September of 2024. And I wish I had something better to say, but that's just what we're looking at here. Sometimes these markets will get ahead of steam, and the same way they did during COVID, where we were looking for, what was the old high? What was the old high? What was the old high? It's the flip side right now as we look for what was the old low, hoping that one of these lows gives us a floor that we can recover from. So defend what you can. I would say that there's probably 10 to 20 cents worth of risk still on the charts if you look at corn. And I would apply that actually for beans and wheat as well, especially if you're looking at the spot months. It's just the way it is. Again, I wish it was different. I'm not happy about it, but it is the market that we're dealing with. We have to deal with this reality. So there are still opportunities. We'll see if the August 12th USDA report can turn things around here and we get some sort of recovery rally. Let's move over to soybeans. Soybeans traded as low as 9.89 and a half after poking its head above $10, 10.02 and a quarter. We had a nice bounce in beans after good exports, unexpectedly good exports. The 8-month lows in beans brought out all the buyers except for China. China continues to sit on their hands when it comes to buying U.S. beans. So we'll see how that progresses as well. But I'd say long-term, looking at the long-term soybean charts, there's 20 to 30 cents worth of risk here as the market continues to do what? Well, it's chasing the old lows on the charts. I know it's frustrating. I know it doesn't make any sense, but this is the market that we're in. And I've been doing this in one way, shape, or form since about 1989. And sometimes the technicals matter, and that's what's driving us right now. We're well supplied. The crop conditions came out. Corn's at the best crop conditions we've had in 9 years. Soybeans the best crop conditions we've had in 5 years. So there's nothing stressing the bears here. There's no weather issue. And there certainly is, as we all know, not a huge demand issue. And now we're just arguing about what's the yield going to be in corn. Is it going to be 188 or 182? I don't think that even matters. That's wasted breath, in my opinion. That's who's right or who's wrong about the yield. I could care less. I want my clients to have the best opportunity to sell rallies and to not feel like they have to sell into new lows because they have no other choice. So that's kind of where we're at right now. We use these puts. We're in a knife fight. You want to make sure that you're not overspending on puts to defend what revenues last. You want to make sure that if you were disciplined and 2, 3, 4 months ago, you did something when beans were, north of 1050, or if you did something when corn was north of 450. Those hedges now are becoming very, very valuable. And that's where it helps to have somebody with experience to help you manage the value of those puts. So I would reach out to you and invite you to give me a call if you're in a situation like that where you have a hedge on and you're like, wow, what can I do with it now? Because the hedge is gaining value while your cash market is drifting lower. So that's really what I wanted to say about the grains. The wheat continued lower as well, under pressure. Again, I don't want to beat a dead horse. We're under pressure here in the grains, and we're flirting with, basically 5-year lows, going back to the 2020 lows. And across the board, we're either 20 to 40 cents away from those lows, and it's important to defend that in case we do slip down there. The flip side has got to be cattle. Cattle, impressively, what a horrendous whipsaw. I mean, it looked like the highs were in. Actually sent out a recommendation to everybody that if you've been waiting to do something, it might be a good time to do it. And here I am 3 days later, and we're right back on the highs. And I think that's what it comes down here as we finish this week. Will feeder cattle, will fat cattle take out those highs from last week? It's a simple exercise. If we go north of 341, 342 in feeders, It's going to bring in new longs, and it's also going to have people talking about what comes after 350 feeders. For the fat cattle, live cattle, look at Deese. If we get above 230, 231, 232, that's going to open the door there as well. So October fats finished the day up 3 cents. September feeders finished the day up 5.1 cents. October feeders finished the day up 5.40. November feeders finished the day up 5.50. So extremely strong, more buying interest coming in after what it looked like we were going to roll over there. We'd had about a $10 break in feeders. The market just shook it off and came right back at it. And it's actually helped the hogs too as well. You can go out to April hogs now and all the way out there. That's a lot of time. And we're trading close to 90. That's a really good recovery. If you take a look at those April hogs of 2026, they are right up on contract highs again. We were here in the middle of June. And if you remember, we went from 90 down to sub 84. We've come all the way back. So is this going to be some sort of a situation where 2 months from now we're going to be like, oh, look, that was the top. You had to sell it there. Or is it just going to be another leg up? Since we don't know, and I don't play the game where I'm like, trust me, sell it here, or trust me, buy it there. All we know is that these are good opportunities to defend revenue. If you're a producer, you're always bet long. You want to make sure that you are doing two things: defending the revenue when it's given to you, and also not capping it by getting aggressive and overselling up here. So if you're looking for help, give me a call, 312-638-8868. Chris Robinson. We'll be back at it tomorrow. We'll see if we can get some footing here in the grains.